Let's get across the weekend headlines. What's driving market sentiment to start the week? Mark Gardner from NPC Markets joins me now. Mark, welcome.
Happy Monday.
Happy Monday. Peace on, peace off, straight open, straight shut. That's going to be the driver today.
Yeah, look, if President Trump could possibly just stop tweeting and just let the MOU process play out. There were some rumours over the weekend that Iran may have walked away. There's also been rumours flying around about Israel obviously attacking Lebanon again, which is part of, which is a bit of a non-negotiable as part of the deal. So we've seen sort of futures drop, 0.6 or so this morning, and oil up around about 1 to 1.5%. It's a little bit on and off. So. But I think where we're sitting at oil prices at the moment, and energy stocks in particular, I think the risk reward is definitely probably to the upside, to be honest, because this could shut at a moment's notice, and we're basically back within about $5 in oil from where we started from in the first place. Okay,
so we're watching energy. Gold retreated yet again. Copper was higher, so a real sort of mixed picture being painted by commodities.
Yeah, look, I think where copper is benefiting is obviously it's part of that hyperscaler thematic and the data center build out, which is basically driving the US economy. And that demand, there's no substitute. You technically can substitute with aluminium, but you really can't, to be brutally honest. So I think that thematic will continue, just given the structural deficit that's been looming for years and years now. And any increased demand is going to probably provide a floor on that price. Gold and silver, and platinum probably, for instance, they're not yielding assets. They're not going to benefit from a hawkish environment, which we've now got after the Fed across the board globally now. The EU's looking at another hike. We're on hold, but any sign of inflation, we may do another hike, and then you've got rate cuts pushed out till the end of next year now for the US. So. And then potential hikes by October. So it's not a great environment for gold and silver, but I'd probably favour them to largely go sideways. They've come a long way off their highs, and central banks have said a number of times over the course of the last few weeks that they'll continue buying as they diversify away from US dollar.
So that is the basis for commodities, at least the move early in this session. What else do you see really playing to the market sentiment this week? We do have a couple of really big data points here locally.
Yeah, we've got CPI and we've got employment on. So CPI is on Wednesday, and then we've got employment on Thursday. They're probably our two biggest numbers, and just given what RBA Governor Bullock said, essentially, if it's a high number, it's back on the table again. So, and the market's gone a long way to basically pricing it out and saying they're done. So that could cause a bit of a shock. So there'll be some pretty nervous eyes on that on Wednesday, I suppose. And then we'll see what happens with the labour force numbers on Thursday as well. So I don't think there's a hell of a lot out in the States this week. There's some manufacturing numbers globally, etc. I think all eyes will be on the MOU, US-Iran negotiations. And apart from that, we don't really have any earnings. I think we may have Metcash today.
I think we've got Metcash today, yeah. Which will give us a bit of an insight into what's happening in that supermarket space. But Mark, how active are you being on behalf of clients right now?
Not very at the moment, I've got to say. We've been really patient over the last sort of probably 6 weeks, and pretty active in the US because we've had that memory chip rally and we've had the SOX rally, and we've been on that. And realistically, and a couple of smaller positions like EOS, which benefited on Friday, but we'll be more than likely looking to trim, to be brutally honest. And it's starting to get a little bit frothy again in that sector. But yeah, just trying to be a little bit agile, and if we can turn because we get a higher inflation number or hawkish rhetoric, or we go back into the strait being closed again, we don't want to be caught holding the bag at this point. So just trying to maintain high levels of cash, and we'll and until we get a clearer picture, and then we can start to deploy from that point.
So a bit of an uncertain start to the week.
Yeah, absolutely. Yeah, and look, and it's okay to sit on the sidelines every now and then. Like, it's not a big deal because the value of that cash coming, if it does come off, it will be incredibly high because you'll be able to get those picks that you want. And I don't think you're going to miss out on too much. We've had an extraordinary run. We've rallied basically 11 of the last 12 weeks. It's one of the best rallies in the US for a decade. So I can't see it, bustling to the upside any further. So your risk reward at the moment is probably just, being a little bit cautious and then being a little bit agile with the positions you've got and getting prepared for the next phase.